started out the day, everybody thought Jerome Powell's testimony was going to be the story, and it was early on, but it shifted very quickly. Let me show you an intraday chart of the S&P 500 and what's going on. Here's the important thing. Mr. Powell earlier on came out and said, hey, the economy's not overheating, wages are not as strong as everybody thinks they are, and the economy market lifted here. You see it moving to the highs. But then very quickly, around 12:30 in the afternoon, announcements were made that the tariffs were definitely back on, and you see from that point on, the market's drifted slowly. Steel may be up, and that's true, but look at the rest of the market. It's generally down, and particularly the big global industrial names like Cummins or Lockheed Martin, for example, or Caterpillar, or some of the other big names that are out there in the global industrial space. Cummins, for example, put up those global industrials, and you'll see they're all notably to the downside. So the market overall is having a very tough time with the whole tariff story. Now, why exactly is that? Why are tariffs having a hard time? Why is the stock market having a hard time with tariffs overall? Traders fear tariffs because they believe it's potentially inflationary. Less competition to them means higher prices, which equals inflation. And that's what the market is worried about right now. The big issue here is exactly how big is the inflationary risk overall? We don't know. One thing I think that's very, very important is that if you look at the market reaction, the stock market seems to think this is a very real threat to profits and to inflation. And yet, if you look at the 10-year yield, which is what I look at when I'm worried about inflation, the 10-year yield did not go up on this. In fact, we drifted lower. So the bond market and the stock market seem to be saying different things about the potential inflationary effect of tariffs.